What's up, everybody? Logan coming at you guys with a new video today. And I know it's been a month since I've made some videos. I was out in Colorado training for a race and then playing golf. I did a Spartan race this past weekend. So I actually did really well. It was all like rain, mud, super cold. Swimming in the water is like 42 degrees outside too. So it always feels good when you can do something like that. Also, the Eagles have been going nuts. So I got my Kelly Green, Jalen Hurts jersey. So it's just been a good time lately. I've been trading so much that I just haven't made a video. But we've been doing good. Here are the amplified trades for the last month. If you guys want to check these out and kind of look at the strikes and when I took them and why. I've been heavy to the PCS side for the last month, which has been great, especially with the timing on a lot of these. Especially with how SPX has been moving. So if you guys would like to come trade with us, the link is below in the description. If you use the code AMP, you're going to get $15 off as well for the first month if you would like to give it a shot and try it out. Call out my trades every single day. You guys can take a look at them and we'll go over the Discord a little bit as well. But if you look at the SPX stock for the last last month, I guess, the last couple of weeks, selling these PCSs down here, and then we had that failed breakdown move, right, where we couldn't fully close underneath 4,200. And then we got that massive rally, which was just put credit spread, put credit spread, put credit spread. We go back over the trades here through 14, 17, 18, 19, 20, 24. We were able to sell put credit spreads down in the 4,100 and 4,200 range, even through this fall back here, right? Because the moves were so calm. Friday was the only time we had like any sort of problems. And then we had rolled early on a lot of these days. And then by just doing the 1 DTs, right, it gives us enough time to escape just because we're getting that volatility decay as well for getting out of those trades. So even when we get a massive like 200-point fall, just by selling them where we sell them, we're always able to get out of them pretty nicely. And we had a couple of them like early in the month, we closed one early, but as of right now, we're up about $5,800 for the reference P&L on the year for getting 2 contracts a piece per trade. So I think that's pretty solid. The 1 to 3 DT checklist that we go over, this was the supports from the other week, but right now our major support is 4,200 at this moment. And then we also have some resistance right now at about 4,260 on the SPX at the moment. So we're at about 109. I just haven't updated this one. We're at 109 out of about 110 at the moment. So we're going to start with the expected move math for anybody who's brand new here. We take the previous close, right? And we take a look and say, okay, the market closed at 42.17. If we can get credit below 41.75, I'm going to take that trade every day of the week because that's a 1% down move, which protects us 72% of the time. So getting a nice fill like that, we take them every day at 230. And like I said, here are some of the other trades you can look back on. But today, for example, we're doing the 41.75, 41.65. Yesterday, we had the 41.60, 41.50. And, that was earlier around 256. And since then, the market did just kind of run up. It did kind of puke down at the end of the day, but from about that 250 zone, we got filled, and then it slowly drifted up. And now it's closed about where we got that fill. So nice little reversal here around that gap fill zone this morning. But gap up or down, when you have a gap up like today, you should always expect, I guess not always, I don't want to say always because that's not a great thing to say, but you should expect at some point that gap to fill. Gaps fill 99% of the time, but it doesn't have to be today, right? That's something we kind of keep in mind. But some of the days it does come down and fill it pretty quickly. So that kind of helped us out a little bit once that filled. The VIX also broke underneath 20. We talk about the VIX all the time. And when the VIX is going to take some time to break underneath 20, that's going to show the bulls are starting to gain control of this market again, which is also why I like to trade small and trade often, because that's a good sign to start taking some more PCS shots, right? Especially after you've had 3 to 5 days of red, you should anticipate some sort of a bounce, whether it's 1 to 2 days, or just even if it's just sideways chop, it gives you more time to sell spreads out of the money, which is nice. I talked about our 4,200 level a little bit and 4,260 being that resistance as we poked up to it a couple times today and even yesterday, right? We tried it Monday at 1, we tried it this morning, and we tried it Friday at about 2 o'clock. You could draw a perfect line right here, and that's right where we close. So this market could go either way tomorrow. But at the moment, this all looks pretty bullish with all the bottoming here, but we're out of the money. So like, I don't care if we go up or down. I don't try to predict the price. Most of my winning just comes from putting myself in the right spot based on the expected move, and then being just not on the wrong side of the trade, which you can do in various ways. But, I've been talking a lot with my mentorship group about that as well. And I have been doing a lot more mentoring. So if you guys would like that, you can always just email me below on the email you see down there. So go back over to the trades, right? Go to the expected move. We're making ourselves aware of what the weekly expected move is. So if you can even get trades down, for the week down below 41.36, I like that. I think this could be a bullish week coming up, but if it's not, right, and we get some sort of a pull down, you can start looking at taking even lower than the EM low if you get some trades expiring Friday, or looking at the EM high based on which way the market moves. And then you can kind of like counter trade or be contrarian to where the market has moved. I'm always keeping that in the back of my head now as I look over like the weekly expected moves, right? I don't get myself in a bad play and start chasing if the market's just flying, right? Like once you hit up to the expected move for the week, it generally comes right back down. So I always keep that in the back of my head too. So like I said, for today's trade, if we go back over to the 1 to 3, the position sizing, I like to do 6% at the moment of my account. Trade timing, we take that just after 2:30. I've been actually waiting until about 3 p.m. lately because there's just more, I don't know how to explain it, but there's just been more volatility. So waiting a little bit extra, like giving it a little bit extra time, a little extra longer, we've been getting a little bit better fills, but not very often does that happen. And then choosing our strikes. At the moment, I like anything outside 2x the EM. And if we can get underneath 4,200, I just like selling those put credit spreads down there. It's really hard to get ran over if you're like very aware of your levels. And even if we do, we haven't had a trade to manage in over 2.5 months. So I'm pretty open to that if that's what it comes to. But risk management, we roll and then we begin to hedge against the trade. So if we have to pay a debit to roll, we'll just cover that with like another CCS or another PCS or a condor to help reduce that cost. And then we can eventually take that risk off, right? And then with that expectations, we talked about this quite a bit. You should be able to do really well on your portfolio. I think this year Amplified's up 30%, 30 or 32, and we have 2 months to go. So if we can get to like that 40 to 45% by the end of the year, I think that's fantastic. Anything like that, even if we stay around the 30%, like I'm super happy for how kind of wild this year has been. There's a couple videos or a couple things on TOS I want to make showing you guys some weekly charts. But we'll do that, of course, like, I can do that later this week. I just wanted to mention that. And I did want to thank you guys for all the YouTube support and love. 13,659. It'd be awesome if we get to 14,000 by Christmas this year. I think we can do it, but I really do appreciate that. But if you guys have yet to leave a like, that's going to be everything for me in this video. I appreciate all the support as I kind of go over and talk you through the trades for this week, kind of my mindset lately and how we've been doing so well, even if we're on PCSs or have been for the last, gosh, we haven't done a CCS since, what day is this? The 6th of September. It has literally just been put credit spreads. And, that's kind of going against the trend. But if you sell them at the right time, right? Like we took a lot of this time off because of all the FOMC that was going on. And then you get more opportunities to sell these PCSs, get the next day to move, PCS down here, PCS down here, chasing this trend up, selling them, then waiting, selling them, just staying out of the money. We've been able to do well, even being counter the trend. So it's kind of cool, right? Like even being on the quote unquote wrong side of the trade, I've just picked such solid levels for us to sell that it's actually been really nice. So, and I think that's always what separates like the great traders from the okay traders, is just really being disciplined on when you put a trade on, because that's going to be the difference between you winning and you losing. But that's going to be everything for me. I appreciate all the love and support. You guys are truly the best, and I'll see you guys in the next video.